Welcome back to the End of the Day show. I am your host, Matt Parker. We got an exciting show today talking about some news that came through the tea leaves on yesterday. So we're going to be looking into that. It is juicy and it is about one of the hottest companies, or the hottest company in Silicon Valley, OpenAI. We'll also take a look at how does this market sell-off impact startups. There were a lot of companies at the top of the mark in the private markets, unicorns that were probably looking to go public at some time this fall or make some announcements. But with this callback and this kind of down round for the public markets, it will be interesting to see how it affects these private companies, which many of them are already struggling because they're not growing as fast as they would like to be. We'll also look into a new startup in the wealth management space. We covered a company called Powder earlier when I started this show. There's a new company called Savvy Wealth that just raised a fresh round of $26 million in their A2 round. We'll get into what does an A2 round mean and why they've been able to raise this money considering the fintech market has been quite cold. This is the End of the Day show. I'm your host, Matt Parker. Let's get to it. Are you tired of juggling multiple apps and spreadsheets for business travel and expenses? Well, folks, let me introduce you to Navan, the all-in-one solution that revolutionizes how companies manage travel and expenses. Imagine booking your work trip, managing company cards, and submitting expenses all in one sleek platform. That's Navan for you. They've got exclusive hotel and flight deals that'll make your finance team smile. And their automated expense management, it's like having a personal assistant who never sleeps. But here's the kicker. Navan rewards your employees for savings on travel costs. It's a win-win that'll have your team cheering and your CFO doing the happy dance. Whether you're a scrappy startup founder or a Fortune 500 company, Navan's got your back. They're trusted by over 8,000 companies worldwide, and for good reason. Ready to simplify your business travel and expense management? Head over to Navan. That's get.navan.com/stretch-4. Again, that's www.get.navan.com/stretch-4. Trust me, your future self will thank you. All right, let's jump into today's top tech stories. So, top of the list today, we got OpenAI making headlines, but not for reasons that you might think. 4 more executives have left the company, according to the information in multiple news outlets, raising more eyebrows in Silicon Valley. Meanwhile, Elon Musk is renewing his lawsuit against OpenAI. Is this a sign that OpenAI has peaked and that now with many more market competitors, are they going to be challenged? This is a story that is really causing a lot of interesting conversations. So if you think about OpenAI, they launched ChatGPT in November 2022. It became the fastest growing consumer app in the history of technology. They have ramped their revenue to northwards of $4 billion in annual recurring revenue. They've raised nearly $20 billion in capital at nearly $100 billion valuation. They've also seemingly fired their CEO, Sam Altman, in November of 2023, rehired him within a weekend, and went through countless changes. This company started as a nonprofit with 11 co-founders. With the most recent news, we see 2 more defections, including John Schulman, who left the company, and he made his announcement on Twitter. And the most intriguing factor of his announcement was that he actually came out and said that he's not only leaving OpenAI, but he's heading over to Anthropic, which has historically been the biggest OpenAI competitor. It's very interesting to consider and see this happen because rarely do you see founders, co-founders leave their company, but also join a strong competitor. In addition to John Schulman leaving the company, Greg Brockman, who's another co-founder, who is almost the number, or by many believed to be the number 2 person at OpenAI, announced that he's taking a 6-month sabbatical and he plans to return to the company, but he'll be out for the next 6 months. And additionally, there was another highly sought after product manager who came over from Meta, who also announced that he was leaving. Where does this leave OpenAI? In addition to Elon Musk now bringing this lawsuit back to the top of the news cycle, I think there's 3 main things that OpenAI has to do, and it has to start with Sam Altman. to be in this position is very, very, it's what we all want as startup founders and venture people. Being in a position of OpenAI is what you want, right? Hundreds of millions of monthly active users, billions of dollars in monthly recurring revenue, continuous press cycles and stories about the company. But it does feel a bit like OpenAI is falling into this place that a lot of startups end up, where they're no longer just this hot commodity. They're getting competition from all sides, right? Mark Zuckerberg launching Llama 3 a couple weeks ago, saying that publicly that he's going to deploy tens of billions of dollars to build the next version of this and potentially have it out by the end of the year. And also he's open sourcing it and giving it away essentially for free. And many are saying that this Llama model is better than OpenAI's models. Then you have a company like Anthropic, which is, I'm a power user of Anthropic and their Claude product. In many cases, Sonnet 3.5 is still a very, very great model, and they've built a solution that's built for the enterprise. They've been able to attract talent, hiring a former Instagram founder to lead the product, now taking a co-founder from the team. And obviously we know that, Anthropic was a spin out from OpenAI. They've went on to raise several billions of dollars themselves, and they seem to be ripe to be a player here as well. And this just kind of adds a lot of insult to to what's happening at OpenAI. And Sam Altman, this kind of power figure that he is, seems to be struggling. And I think the biggest thing they got to do is they got to get back to the product, right? We got to see ChatGPT version 5 get out by the end of the year. The voice things that they announced this summer that have really not really developed, we need to see what's going on with that. We need to see that actually get out. And I also think they have to make a hard decision and make sure that Sam Altman joins this company's cap table. I've never seen a company with this type of value have a CEO who has no financial upside. It just makes no sense from a financial position. So I do think that Sam Altman has to become an actual owner of this OpenAI entity and really understanding it's his skin. Moving into the second story of the day, we witnessed yesterday, Monday, some of the biggest sell-offs of public stocks we've seen. This was, I believe, led by the Wizard of Omaha himself, Warren Buffett, who essentially got to a position of Berkshire Hathaway to about $270 billion in cash, selling off $50 billion in Apple stock. And really, how does this impact smaller private companies, right? There was another piece that came out about Carta within the information, talking about the lack of growth in many unicorns. And essentially a unicorn is any company, a private company that's valued over $1 billion. And we've reached a peak, I think, in 2021 with over 2,000 of these companies. And now in 2024, 3 years later, we've only seen 3 companies in tech go public in 3 years. And this is very, very alarming because unless you are a top 10 performing company, unless you're a Stripe or a Figma, it's very hard to actually get liquidity in the private markets. And so there's a lot of companies that seem to not be growing that fast, having massive valuations that they've received in the past 3 to 4 years with a liquidity problem. And so it is an interesting story considering the stock market's down. What will become of these companies? Will these companies just force themselves to go public and just take whatever the public market gets them? Will they be able to get extension rounds or do down rounds to get cash in the bank until they can get more profitability or reignite growth? Or will we see acqui-hires and wind downs happening in the next 18 months? It's going to be fascinating because it just really doesn't look like all of these companies can have good outcomes, right? There's going to be a limited amount of companies that actually can go public in the next 6 to 12 months. So we'll be tracking these companies very deeply because me as an early stage founder, this all impacts us as well, because if these companies can't go public, what are the outcomes that you can project in your company that's raising at the Series C or Series A level, right? It's a very hard projection if companies that are in your market or people that you're competing with or going after aren't doing well. How are you going to position yourselves to sell the story that you are going to do well and you're going to be able to grow, 200-300% over the next 4 to 5 years? So moving on to a startup spotlight, On to Wealth, which is a digital first financial advisory platform is planning to enter the next phase of growth and received another multi-million-dollar infusion of capital. The company's latest $15.5 million funding round is led by Canvas Ventures, which is announced Monday morning, marks the completion of its $26.5 million Series A funding round. And this was actually kicked off by the investment firm from the USC Berkeley-backed VC firm, the House Fund. With this investment, Savvy aims to bolster its AI-powered technology platform, expand its product and engineering teams, and recruit more advisors to its national affiliate RIA Savvy Advisors. The funding round, which also saw participation from Thrive Capital, which we'll talk about as well, Brewer Lane Capital, and Index Ventures, the House Fund, and the Alumni Ventures, bring Savvy's total funding to $33 million since they started in 2021. The founder and CEO of Savvy, who sold companies to Brex in his prior life, he's completed Y Combinator, he was a Thiel Fellowship alumni, and now he has 2 successful exits, and he's on to his 3rd company. So, this story is one that I like to highlight because as much time as we can spend about the negative things happening in Silicon Valley, there are great opportunities and there are companies that are still facilitating large rounds of funding in what can be a hard market. Fintech is being very, very clear that it's a very hard market, both from a public perspective and a private perspective. But what we've seen, as we see with Savvy, is companies have been finding a way to raise money and reinvent themselves in these times. Funding. The Raising Venture Capital newsletter is a newsletter that I do every week. It's first up. It's a tip for founders. When it comes to fundraising, it's all about location. This week, that's the story I talked about. We're seeing a trend of founders looking beyond their local markets for funding opportunities. This geographic diversity can open doors to new perspectives. And so my perspective, even though I live in San Francisco and I believe that San Francisco is the best place to be if you're an early stage founder, I do realize there are new markets and new opportunities in smaller markets. But to shape up and talk about 2 big funds that are based here, one based in New York, one based in San Francisco, XYZ Capital and Thrive Capital both announced new funds these past 2 weeks. XYZ is focused on the public sector and climate solutions, while Thrive, as many of you may know, has secured a massive $5 billion round. This is led by Josh Kushner, brother of Jared Kushner, who is the son-in-law of Donald Trump. He raised a massive $5 billion round, and he got lauded by many of the top founders in Silicon Valley that he's backed, including OpenAI, Scale AI, Stripe, and many more. And speaking of fundraising, with the Raising Venture Capital newsletter, our premium service that we're offering is a fundraising immersive that starts on August 15th. So we're offering this fundraising immersive where you get to connect with founders that have raised more than $10 million in venture capital within the past 18 months to see how they did it. What are the things you should focus on? What are the funds you should focus on? How should you think about building your product and telling your story? That's going to start up on August 15th. We also are doing navigator sessions for insider conversations with VCs and funded founders from some of the top firms. So these 2 firms, XYZ Fund and Thrive, we're introducing you to funded founders from these companies to tell you their story of how they strategically raise from these funds and give you insights that can help you with your pitch and your story and your fundraise. And last but not least, we offer the Seed Track subscription, which includes monthly investor calls, and we help you complete automated applications for 52 investors. So the 52 firms, of that 52, will help you decipher which ones you should apply to, how you should craft your story, how you should create your follow-up, and how you can optimize for funding. So check out the links in the show notes if you're interested in any of our services as they relate to fundraising. Looking ahead as we end today's show, we'll keep an eye out for upcoming tech earning reports. These are really critical right now as AI has been at the top of the news cycle for both startups and large companies, but we're starting to see some breakdowns in those numbers. And so I'll continue to track that here and see how that will affect and impact startups. And tomorrow we'll do even more a deeper dive into these OpenAI executive exodus. What does this really mean? What is really happening? It seems like news is coming from there. It seems like there's about to be a big change. I think they're going to raise a large amount of funding. They're going to ship GPT-5 and they're going to bring Sam Altman onto the cap table, but we'll see, and we'll continue to follow this story. Thanks a lot for listening to the End of the Day show, brought to you by 4insights, where you can find us at FOURINSIGHTS. You can find us on Instagram, on YouTube, and on Twitter, where we give you these daily updates. I'm your host, Matt Parker. Find me on Twitter at Matt A. Parker. Thanks for tuning into the show. Please like, subscribe, comment, and provide us feedback with what you'd like to hear from us. But thanks again. Hope you're having a great Tuesday. It's the end of the day. I'm out.